Stigman is sleeping peacefully. Suddenly, boom, looks at the sky. Not thunder, not rain, metal birds. Way too many metal birds. Okay, that's new. The metal birds fly to the capital. Minutes later, Nicolas Maduro is gone. No speech, no goodbye. Just removed. The country freezes. Some people cheer, some people cry. At the exact same time, something else happens. Phones start buzzing, social media explodes. In cities all over the world, Venezuelans celebrate. They laugh, they cry, they hug strangers. For the first time in years, they feel hope. Maybe my life can change. Maybe I can go back home. Now, pause. This video is not about politics. It's about money. Yes, the United States wants money. They want oil. Everyone knows that. And here's the truth. Many Venezuelans don't care. Take the oil. Just end the dictatorship. Markets panic. Regular people open their wallets. They count their apples. And somehow, there are fewer than yesterday. That's why this story matters. Now let's answer the big question. Why all this chaos? Short answer, oil. Not freedom, not speeches. Oil. This country is sitting on a crazy amount of it. More oil than almost anyone else. Think of oil like a giant money well underground. Very deep, very valuable. Years ago, it worked fine. Millions of barrels every day. Money flowing everywhere. Then the machines broke, pipes rusted, refineries stopped. Not because oil disappeared, because nobody fixed anything. Imagine owning a gold mine, but losing the key. That's what happened. So powerful countries don't see politics. They see a broken machine with money trapped inside. Fix the machine. Oil flows, money flows. And that's why everyone suddenly cares. Not kindness, just money. So if there's so much oil, why isn't it flowing already? Because oil doesn't come out by magic. It needs machines. A lot of machines. Pipes, pumps, refineries. And here's the problem. Those machines are old, very old, broken, rusty. Years of bad management did this. No maintenance, no upgrades, no repairs. Money that should have fixed machines went somewhere else. Engineers were fired, experts replaced by loyal friends. Friends who didn't know how to fix anything. Imagine running a factory with people who never read the manual. That's what happened. So today, the oil is still there, underground, waiting. But the machines above ground can barely work. This isn't a switch you flip. It's a mess you clean. Fixing this takes time. Years, not weeks. And that's why oil won't suddenly flood the market tomorrow. Broken machines don't care about headlines. They care about bolts, pipes, and repairs. And until that happens, the money stays stuck underground. Now things get global. Because oil doesn't just power cars. It powers money flows. For years, this oil wasn't really sold. It was used to pay debts. Think of it like this. Instead of sending money, they sent oil. China got oil. Russia got oil. Iran got oil. Not as a gift, as payment. So oil moved one way and money moved another. But now that flow is changing. Some buyers are suddenly out. Some deals disappear overnight. And markets hate that. Not because they care about countries, but because they care about predictability. Markets love boring. Same rules, same flows. When flows change fast, prices jump. Traders don't wait to see what happens. They panic first. Oil prices move. Currencies move. Stocks react. Not tomorrow, not next year. Right now. And that's how one broken oil system starts shaking the global economy. Now, let's talk about markets. Because markets don't celebrate. They get nervous. When big money flows change, markets don't wait for results. They react first. Prices move on fear, not on hope. And here's the important economic difference. Before, oil was leaving Venezuela, but money wasn't coming back. The oil paid old debts. No cash, no investment. So nothing moved. Now the idea is different. Oil can still leave Venezuela, but money might finally come in. That doesn't mean miracles. It doesn't work overnight. Markets know this. They don't see a solution yet. They see risk. That's why prices don't drop. That's why they stay high. Oil stays expensive. Transport stays expensive. Food stays expensive. And that's when regular people feel it. You open your wallet, you count your apples, and you realize something. Global economics always ends up in your pocket. Now comes the big question. What happens next? Markets don't think in certainties. They think in scenarios. Scenario 1. Everything goes perfectly. Machines get fixed fast. Oil production rises smoothly. Money starts flowing. Prices calm down. That's the dream scenario. Scenario 2. Things go wrong. Delays, sabotage, more chaos. Oil production drops. Supply shrinks. Prices spike. That's the nightmare. And then there's scenario 3, the boring one. Things improve. Slowly. Some machines get fixed, others don't. Oil flows, but not a lot. Money comes in, but not enough. Prices don't crash. They don't explode either. Markets stay nervous. And here's the key idea. Markets don't price dreams. They don't price disasters. They price the middle. They assume progress will be slow, uneven, and full of problems. That's why prices stay high. Not because nothing works, but because nothing is certain. Uncertainty is expensive. It's not oil. It's not Venezuela. It's confidence. Money hates surprises. When rules feel stable, money relaxes. When rules feel shaky, money hides. Investors don't ask, is this fair? They ask, is this predictable? Right now, the answer is no. Not just in Venezuela, everywhere. If rules can change fast, money assumes risk, and risk always has a price. So investors slow down. They wait. They demand higher returns. Borrowing becomes more expensive. Investment becomes harder. Companies think twice. Projects get delayed. Jobs take longer to appear. Nothing crashes today. Nothing explodes tomorrow. But the engine runs weaker. Growth slows quietly, almost invisibly. Less investment today means fewer opportunities tomorrow. That's how uncertainty really works. It doesn't break things overnight. It slowly drains momentum. Money doesn't disappear. It just stops moving. And when money stops moving, the economy feels heavier. People don't notice it immediately. They just feel prices staying high. They feel fewer options. They feel less room to breathe. And when the global engine runs weaker, everyone feels it, even if they don't know why. That's how uncertainty spreads. Not with noise, not with panic, but with hesitation. And hesitation is expensive for everyone. So what does all this mean for you? It doesn't mean panic, and it doesn't mean disaster. It means awareness. Big economic changes don't hit like a storm. They arrive like a slow leak. Prices don't explode overnight. They just stay high longer than expected. Opportunities don't disappear. They become harder to reach. Money doesn't vanish. It moves slower and becomes more careful. That's why understanding this matters. Not to predict the future, but to avoid being surprised by it. When you know uncertainty is expensive, you stop waiting for perfect moments. You plan better. You save smarter. You take fewer emotional risks. Because the global economy isn't a movie. There's no dramatic ending, just choices, every day. And the people who understand what's happening are always one step ahead. Not richer overnight, just calmer. And in uncertain times, that's already a big advantage. If this helped you stay calm and understand what's really happening, give it a like and subscribe for simple, honest explanations about money. See you in the next one.